Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 28th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes together to impact the markets with my market analysis. And I do the same thing for you folks out there in these daily market commentaries, but I go a little bit further and talk about some option strategies I find to implement into my portfolio based on those assumptions I come up with my market analysis. Now, for you guys, you can also check out my guidelines to trading options. I'm here to increase your probabilities of success. And I know that you guys are out there struggling with finding the right directional moves for any underlying or ETF or future. Well, I've done that too over the course of my 25 years of trading, and the struggle is real. But the only way to really increase your probabilities of success, because all of that reading of the tea leaves is really just that. You're trying to read tea leaves, and it doesn't always work out where you have a support and a bounce. Yes, you can increase your probabilities there, but the best way to do that around any given assumption is implementing options into your portfolio according to that. And what we do is we're not just picking option strategies out of the hat here at Pro Trader Strategies. What we're doing is we are finding what's going on around that underlying we're looking at, and we have a directional assumption in finding the best strategy for that. It's not just buying puts for a day like today. Sometimes it is selling calls for that move, and we talk about what you need, all those guidelines in order to find the right strategy. So please check those out at Pro Trader Strategies. And without further ado, let's get on with the economic data. Across the pond, not really a whole lot to see here other than talking about geopolitical stuff. Germany is basically locking down. It looks like they're starting to see some more outbreaks, a resurgence of this corona. Even here in the United States, basically everywhere, you know, it's going to be pointed out in certain areas for, other than anything other than geopolitical stuff. But anyway, the fact of the matter is it looks like we're starting to see more closures. That being said, even Chicago said no indoor dining, and I think just the other day it was 35 degrees. So it doesn't look like restaurants are going to be doing too well. Bars, I think, were 25% capacity. So really starting to see the lockdowns come back. Now, without the stimulus happening, all of these things are kind of culminating to a very bearish signal. We needed this stimulus in order to get the consumer spending and revamp that. Well, if everything's starting to close down, those people that are unemployed are not going to be able to find a job. And people that were furloughed, who are still getting a paycheck, are probably not or at least had a job, are not probably going to be staying in that camp any longer. So we're seeing a lot of this happen. That is a very bearish overtone here and overseas in those markets as well. So let's take a look at crude oil, because we've got crude oil inventories coming in at a build of 4.3 million barrels, expected to be a build of only 1.5 million barrels. Now, something to note I forgot to mention last week was we saw some drawdowns happening, but a lot of that had to do with refining capacity ramping up and storing of different buckets of what we are refining that crude oil out to be. So those we're building in inventories that aren't really part of the headline number, so sometimes that gets a little bit lost. Today, really seeing the market pressure to the downside here in crude oil, as you can see, breaking below that 200-day simple moving average. It very well could be looking to test that $32, let's call it $33 Fibonacci right there at the 38 Fibonacci. So we do have a couple of bottoms here in the overall markets. I might as well pull up my pen just to draw a line in here for fun, if it wants to work. Where is my mark? There it is. It's way down here. Sorry. So let's do that. So actually, I'm going to go to the line here. So a line in the sand to keep your eyes out for is right there. That's kind of lining up with probably $37, let's call it. So support at around 37 even would be something you're going to be looking at. Anything below that, then we're going to be looking at a target of the $33. That's where I came up with that $33. Yeah, the point of control is a little bit higher than there. That's where it's going to get comfortable, but it doesn't look like we're going to see a whole lot of manufacturing, a whole lot of driving happening coming into the winter, or even travel on airplanes anywhere coming into Thanksgiving and the holiday seasons thereafter. So travel not looking too good right now. Now, gold, I would expect to see a little bit more of a bounce here. We're even seeing the Fed kind of whisper that if there is any problems after the election, that they might come in and actually do something. What that means is that means they're going to come in and start buying bonds, right? They're going to try and lower interest rates by doing some quantitative easing there. So I would have expected a little bit more bounce here in gold. We're also seeing Bitcoin, which I don't talk a whole lot about. Bitcoin is coming off today after making some massive moves to the upside yesterday, very near a 3-year high. The high is like 20,000, you guys. So really an engulfing pattern here for Bitcoin, which I would have expected gold and Bitcoin maybe even to start making some moves based on some of those comments we started hearing out of the Fed governors. But it's just a very bearish day across the board anywhere you look. Bonds moving just slightly higher, 9 ticks. That's pretty much unchanged for the most part. But again, with that Fed action, I think the risk is to the upside in the bond futures, and the risk for interest rates going lower is probably where we're going to be seeing those markets move. All right, and then the VIX testing $40 to, or 40 in the VIX today. CBOE volatility index went into the 40 handle earlier on. We've come off a little bit, but still up on the day. And that's because across the board, equities are just falling flat on their face. Here you can see the Dow Jones down over 800 points. Slightly off the lows if you want to have a silver lining there. But looks to me like we are going to test maybe even the value area low, that 2,500 psychological mark. My mark line in the sand, like mark of delineation, is just slightly higher than that by about 200 points. But we have a support here at the 200-day simple moving average, and then again right around that 2,500 area is going to be another support level. I think we might very well test this, especially heading into the election. Nothing being done with stimulus, coronavirus starting to rear its ugly head again, and just a lot of up in the air. We're seeing earnings, we've talked about this, come out with better than earnings. We're seeing that consistently be a theme here. Forward guidance, these guys are not giving any clarity on forward guidance at all, and that's spooking the market as well. We'll talk about that with a few of my trades a little bit later, but NASDAQ down over 300, almost 400 points. E-mini S&P is down 100 points on the day, almost 3%, as you can see there, and going down to test this Fibonacci, which is lining up with 3250 is what I was talking about early last week. That's where it looked like we were going to migrate. Something to note though here, we do have a time volume node shift. We were talking about a shift higher in those being a price acceptance a little bit higher, and that could levitate this market, but it looks like the overarching theme here is that the markets are overbought, especially if there is no stimulus and something to keep this economy moving here. And then break down to the E-mini S&Ps, you can just see Germany talking about lockdowns and the market just falling flat on its face. No real support here. Profit taking maybe is what you could call this little green candle packed in the middle here, but for the most part it does not look like we are going to recover from today. A rally back to unchanged, which I just, unless they say that, hey, we're going to do the stimulus or there's going to be some kind of news coming out, it does not look like we're going to see that bounce. All right, so trades that I've done. Microsoft, I told you guys I was going to play both of these, Microsoft and Boeing, to the downside with a bearish trade here, and that worked out despite the fact that Microsoft actually had pretty decent earnings. They talked about their Azure. As you can see, they beat here on the actual number here. They said Azure was doing very well. That's that online. Remember, the cloud network. I've talked about, I think that that's the big area for expansion because it is high margin, because there is very little wages and things that goes in there. It's just a high margin business. Well, Azure is what Microsoft uses. That is for their cloud network. They've done very well on that. Their one thing, though, that they gave was a little bit of a cloudy forward outlook. Not really sure what was, going to happen in the next couple of months. And these forward guidance being cloudy is really spooking the market, like I said. And as you can see, based on the earnings release, they did get a couple of spikes here on the first earnings layout. They got that move higher based on the better move, but then they started having the earnings call, and you can see that was very cloudy, and the market did not like that whatsoever. So you can see that we're down almost 4% here in Microsoft, leading the charge to the downside, as we saw most of the indices only being down around 3%. This is a percentage point ahead of that. Boeing. Oh, so let's actually talk about what trade I did in Microsoft before we get moving on here. So in Microsoft, what I had done was gone into those weeklies that expire on Friday, and I sold the October, so they expire on the 30th October weeklies, and I sold those calls at the 225 level. So I sold October 225 calls. Let's try and squeeze that in there so it makes it in line for $1.07. Obviously, we did get a little bit of spike in volatility today, but pretty much offset by the volatility, spiked a little bit, but it wasn't a ton. As you can see there, basically 2 percentage points. So that did make it where I wasn't able to get out for the pennies on the dollar, but I was able to get out for 7 cents. So I got out for 7 cents on the day. So a nice win on the directional move in Microsoft, despite the fact that they were that they beat on earnings. Now, I talked about this also, that I think that unless they give really good forward guidance, a lot of these companies, were seeing this already as a theme heading into this. Better earnings, you better give better forward guidance or some kind of clarity of what's going to happen or what your roadmap to staying ahead of all of this is. Well, I mean, Microsoft actually has that with the Azure Online Cloud, all of that stuff, stay-at-home kind of office build-out. That is the stay-at-home trade, and it's still struggling. Boeing crushed it on earnings, despite the fact that nobody is buying airplanes or anything else. This was supposed to be a negative on Boeing. Can't remember exactly what negative was. Yeah, negative $2.33. Came out with a beat of a positive $1.39, so beating by almost $4. And we're seeing it down over 3% right now, and down $5 on the day almost. As you can see, directional move, like I said, they don't have any forward guidance, so they're going to get crushed on it. So with Boeing, again, went into those October that settled the October 30s, right? And I sold the October 167.5 calls in there. Put me a great strike location for this trade, and collected 96 cents for that. So 96 cents on that. Well, obviously we got a spike in volatility and not a massive move to the downside, but nonetheless, I think the volatility in this one offset me a little bit more. So I got out for 21 cents. So I got a credit there and out for 21 cents. So a nice trade there. And I did both of these small. I'm staying kind of smaller than what I normally trade earnings, just because of the aspect of who knows what's going to happen. And we've got tons of other opportunities out there that I want to make sure that if I get clipped on one of these, kind of like IBM is clipping me on the downside with that trade, I might as well talk about it. You'll be able to see that. Remember, I sold the 105 puts in there, dollar cost averaging to make my break even 112.5. Well, it looks like I might be getting those 105 put to me as well. So I'm long 120, long at 105. I'm kind of already picturing that in my head that's probably going to happen. And dollar cost average around 112. I still believe in this. They have cloud services. They actually have done pretty good. Forward guidance, they were cloudy on that, and that's why they're getting beat up. And the broader market's just getting drawn down with the tech sector as well. But I still have on those short 120 calls in there that are going to expire in about 20 days. So that's just trying to lower my overall cost average on that trade as well. But things we've got coming out after the close that I'm probably going to trade. I still have long forward in my portfolio, long-term portfolio in my IRA as well. I'm going to hold on to that. They have earnings after the close today. Also, we've got Gilead Science, Amgen, and Spirit Airlines. I'm not going to play Spirit Airlines. There's just nothing there. Visa, I just don't know where to play Visa. I think that they're probably doing very well on their credit cards. People are using credit cards probably a lot right now, but we're going to have to start really worrying about that credit risk because people are going to start defaulting on some of those payments. And Grubhub is also after the close today, which I don't think I'm probably going to trade that either. So I don't know if there's anything. I'm probably going to try and force myself into something like Amgen, Visa, or Grubhub. And then we also in the morning have Dunkin', Yum, and Apron, which I might play Yum Brands to the upside because I do think that fast food is doing very good. Grubhub's probably doing well as well here, so I don't know. I don't know if I want to even play that one because I'm just kind of up in the air. Maybe I'll do Iron Condor, and because I don't have a directional move, maybe I'll do something like that. I don't know. That's going to be a game time decision. I'll have to let you guys know how that works out. One last thing to note is we do have something to go over. And of course, it is the disclaimer. Make sure you read over this to know your risks and what you're getting involved in. That's all I got for you guys. Go to Pro Trader Strategies. Sign up for my webinar on the roadmap to trading options. Like I said, we're streamlining the process for you. And I know you're struggling out there trying to find some directionality. Well, I can help you out with that here in these daily market commentaries, but finding the right strategy for your given assumption, follow that roadmap. It will lead you to the highest probability strategy for your given assumption. All right. So that's all I got for you. Other than if you can't take that, take it easy.